the attractions are the ability to invest in a very wide range of businesses that you wouldn't ordinarily find through buying either stocks here in Australia or elsewhere, or buying an ETF. So that's the sort of first point. The second point is that history has shown that these businesses and the investments tend to be very resilient when the economy is going through some challenging periods. These are businesses, first of all, they're very well run. They do adapt to these sort of changing market conditions really quickly. And so our experience over the last couple of decades is that actually these businesses do very well when the economy and end markets are very challenging. And one of the things that we think is a real strength is that during those sort of periods, you actually see lots of opportunities emerge. And this is where these type of investments really thrive. That you find the private equity firms looking at, rather than seeing challenges, they see opportunities. And the organizations that we invest in see these sort of perhaps more challenging economic times as real opportunities, either to gain market share, to make further investments, to consolidate their industries. And that's where the sort of real strength and opportunities come from. And so notwithstanding the fact that economically things are sort of quite difficult at the moment, we're actually really excited and very confident about the opportunities that we see in the next sort of 3 to 5 years with these type of investments. There are some important elements to private equity which do mean it's sort of different than sort of buying sort of stocks and shares on a market. So I think that one of the sort of main thing is that this is a less liquid asset class, that when you're sort of committing capital to these businesses, you are committing it for the sort of medium term. And so these are not sort of businesses that are traded on a daily basis. So that's one of the sort of key differentials. And so it is backing those businesses over the long term and riding out periodic challenging economic times. So I think that that's one of the sort of the key differences. We do think that one of the sort of real advantages is that sort of diversification across different industries and end markets that you don't get with public markets. And I think there have been a number of examples where we've seen the ability for our funds to gain access to, whether or not it's parts of technology or there are parts of the economy where there are really good growth prospects, but actually there aren't very many public market businesses which can give you that sort of real sort of targeted exposure to those growth opportunities.